safeguard their interest, a mutually aided cooperative societies act, MAX Act, is there now. So that can be a separate shape. Or because the word institution is not related to a particular type of organization. For example, some Swamijis would have floated mutts. You are having Kanchi mutt, let us say. So mutt is neither a trust, nor a society, nor a limited company, nor a cooperative society, nor a mutually aided cooperative society. Mutt is an institution by itself. So mutt is also a type. Now so many mutts are coming. Kanchi mutt is age old, maybe 1000 years old, more than 1000 years. But so many Swamijis are starting their own mutts even now. So I think Dayananda Saraswati ji, it's a society. Dayananda Saraswati near Coimbatore, is a good institution. So they also give training and ask the people, their disciples, to go elsewhere and start their own institutions. So one such Swamiji has started in Andhra Pradesh, whose interests are possible. Which entity at which time is the appropriate one to start with? So choosing the entity is the first step, then drafting is the second step, where we have to take a number of precautions. So now, first I will spare a few minutes for the main difference between the trust and the society. To start a society, you need 7 persons, majors. You have to specify who is the president, who is the secretary, who is the treasurer. Minimum 4 executive members you must specify. Out of the 7 may be the executive. You may minimum 7 I said. It may be 9, it may be 13, or it may be 10 or 15. But minimum 4 members as per the society that must be the executive. So you may have more number of executives also. So you can start a society with minimum 7 members. You have to register under the Societies Act. You will have just like a limited company, memorandum of association and articles of association. So with a say a few hundreds of rupees, you can register it. Every district registrar is now entitled to register this. You can register a society in no point of time. But Societies Act says surplus money shall not be distributed among the members. Societies Act says surplus money shall not be distributed among the members. That society every year must convene an AGM. So the executive must be elected in the AGM. The members' admission rules must be specified in the bylaws. So now we have seen most of the engineering colleges, mushroom growth of engineering colleges, education, every lane passes by lane you find a school. These schools and colleges are mostly promoted in the shape of these societies. So what is the advantage of the society? What is the biggest disadvantage of the society also we must tell them. There are a number of societies which I have seen struggling in the courts to safeguard their interest. Every society is a public society, non-profit organization. If you go and ask them to give the copy of the bylaws, they are bound to give. You pay 10 rupees and then ask them under the Right to Information Act, please give. They are bound to give. They cannot say it is a private affair. I, my wife and my son only have contributed the money and started this engineering college. They cannot refuse. After they giving, you found that 1000 rupees is the membership, annual membership. You, your 10 of your friends pay 10,000 rupees just before the notice of the AGM. You know the AGM due date. If it is July 31st, in the month of June, you went there, 10 of you paid the money. You say that admit us as members. Management cannot refuse. They started engineering college. You are the 10 members now. So in the AGM what happens? Those 7 members should step down and your 10 members should step in and manage. It happened, and it is happening elsewhere also. Nothing can be prevented. So while drafting, while promoting a society, Because the Societies Act says democratically members shall be admitted, AGM shall be called for, executive shall be elected, executive shall manage. Nothing can prevent. Let somebody promote an engineering college when it is flowering. Let the fruits be drawn by somebody else who is intelligent enough. So when we are giving the advice, what sort of precautions we have to take? So it is not the case in the case of trust. To promote a trust, first of all, what is a trust? Trust is an obligation annexed to the property arising out of the confidence reposed by the owner, either for the benefit of himself or for the benefit of others, himself and others. This is the definition, section 3 of the Indian Trust Act 1882. Even now, this Trust Act only is the act prevailing throughout India. No state government has promulgated any separate Trust Act. Only in the Maharashtra, Bombay Public Trust Act 1950 is the one act that is prevailing, except which is the then Maharashtra government, now the then Bombay state, now the Maharashtra government. So except that act for public trust, there is no Trust Act. The 1882 Indian Trust Act, which I have mentioned, is practically meant for a private trust. Section 6 of this act says that this act is meant for private trust. But from 1882 till now, the courts, in number of cases, have taken this act as the guiding force in trust. Though this act is meant for private trust, the courts have, because there is no other act, so the courts have taken, in the matter of disputes among the trusts, the courts have taken this act as the basis. So the definition of the trust, as I have given you, section 3 of the Indian Trust Act tells us there should be an author who is transferring his ownership on some property to the trust. He is the author of the trust. Then for whose benefit it is promoted, there are known as the beneficiaries. Beneficiaries need not be the trustees. Trustees can also be the beneficiaries. Trustees can also be the beneficiaries, but beneficiaries need not be the trustees. Beneficiaries can be elsewhere. So a trust is managed by the trustees. The word trust itself is the faith. So on behalf of somebody, on behalf of the beneficiaries, the trustees should act in the management of this trust. So now, if the beneficiaries are identified ascertainable people, it is a private trust. If the beneficiaries are unidentifiable but public at large, I said only my family members perpetually shall be the trustees, it is a private trust. I can say most of the income tax commissioners, when the trust application goes under section 12AA, seeing the clauses in the trust, promoter and his family members only shall be for life the trustees, and after their life, whoever they nominate in their family as the trustee only shall become the trustee. No, then definitely it is a private trust. Commissioner says, it's ignorant. Beneficiaries is the criteria to decide whether it is a private trust or a public trust, not because my clauses are there. Even some commissioners today went to the extent of saying that if Venkateswara Welfare Trust, if I say, because the deity name is that it is a religious trust. No. If the purpose, object is to promote the religion, then it is a religious trust. I may have, nowadays you will find Vigneswara Wines and Lakshmi Laundry. So it doesn't mean that the deity name is doing the purpose and object of this thing. Never Vigneswara drank this country liquor or imported liquor, but his name is used Vigneswara Wines. So the name is nothing to do with the nature, character of this. Because the Income Tax Act, now what it specifies, the 1961 Act, before that there was no difference between the religion and the charitable, but now 1961 Act, religious must be separated from charitable. Either a wholly religious institution can be registered at 12A, or a wholly charitable institution can be registered at 12A. Mixing of both the things is not entitled to registration. To segregate the charitable from the religious, the word religion has not been defined by the Income Tax Act, but we know what is religion. A prescribed way of life with a faith in a superpower is the religion. So the purpose, charitable purpose is defined, section 215. The charitable purpose, as we all know, has got mainly 4 limbs. Now actually with these amendments in 2008, 9, 10, it is having 6 limbs. So relief to poor, education, medical relief. 4th limb, advancement of any other object of public utility, which is now qualified from 2008-9 assessment year onwards, that in case of this 4th limb, advancement of any other object of public utility is having any activity in the nature of trade, commerce or business, or any service in the nature of trade, commerce or business, and in that process, if the amount collected by way of fees, cess or otherwise is exceeding 10 lakhs of rupees, it is not a charitable purpose. Up to the last year, now this year amendment of the section 215, 10 lakhs has been enhanced to 25. Now this applies only to the 4th limb, that is advancement of any object of public utility. Whereas the first 3 limbs are not qualified. What it means? A hospital, if it is having a dispensary, pharmacy, where they sell the medicines to the patients, because their intention is not to make profit, to run the hospital. But medicines they cannot give free. They can do other services free, but medicines they have to sell. So when you start selling, you don't know who is going to use the medicine. The patient may use, patient's mother may use, patient's father may use the same medicine or some other medicines. So in the dispensary. So they keep 5% profit, let us say purchase price plus 5%. In the local market they will charge 10%. So now this is a trading, purchasing and selling of medicines is a trading, and you are adding a margin. Definitely you cannot sell less than cost. So whatever little you add, even to cover your overheads, definitely it amounts to profit. So that is a business. So this business is a incidental and ancillary to attain the main objective, cannot be the objective of a charitable organization. If the business is the objective of charitable organization, it is not charitable, it is not contained to registration. But a business can be incidental and ancillary to attain the main objective. A school, education, it can have a stores or shop wherein books are sold, uniform is sold, or say shoes are sold to the students. So in case it is for the attainment of main objective, and if you have a business enterprise, separate set of books of accounts shall be maintained, and if it is in the first 3 categories of education, medical relief, relief to poor, it is not going to forfeit its exemption because of the amendments, either the 10 lakhs of the last year or this 25 lakhs, because only for the 4th limb, that is advancement of another object of public utility. So this is the case where, for example, the word education has not been defined in the income tax. There are not less than 200 editions. What is education by high courts and Supreme Court? Say for example, some folk art, an artist wants to teach to some people. So those who are interested, they want to learn. This man cannot do it freely, so he charges fees. Now, is it an education? The question is, a man started a society to teach this folk art. So, the students come, join, and this man is teaching. There is no certificate,